Hi everyone, welcome to activity-based costing. So this is the first of the two videos under activity-based costing, and in activity-based costing we will be covering two main topics. One is general principles of cost allocation, and the other one is traditional volume-based cost system versus ABC application. So in this video, we will be focusing on general principles of cost allocation. There are two main purposes of product costing. First is to support reporting, where product costing will help to determine the value of inventory and cost of sales. The second one is to make strategic decision with regards to fixing of sales price and product mix. Before we move further, let's have a short revision on these few simple concepts. What is product cost? Product cost is actually prime cost plus indirect cost. What is prime cost? Prime cost is actually direct material plus direct labor. Product cost determines the reporting of the value of inventory and cost of sales, and also for strategic decision making, as I mentioned previously. One interesting fact about the reason for product costing is normally when you do for reporting, you have to follow the accounting standards. So when we talk about indirect costs, we will only include manufacturing overhead amount. However, if you do product costing for strategic decision making, for indirect costs, you will normally include manufacturing overhead and non-manufacturing overhead. While it is easy to trace direct material costs and direct labor costs to a particular product, it is relatively more challenging to do the same with indirect cost. Unlike direct cost, indirect cost cannot easily be traced to individual products. What are indirect costs? For example, maintenance, lighting, supervision. So these costs may be commonly used by different products. Different products might share the same kind of indirect cost, but with different amounts, thus making the allocation of indirect cost to the products more complicated. If a company only produces one identical product, this problem will not appear. However, under the competitive environment, companies usually produce a diverse range of products. So, activity-based costing provides the solution as it allocates indirect cost more accurately based on the activities performed to produce a product. Activity-based costing is a technique of assigning indirect costs to products or services basing on the activities they require. Rather using a single allocation base such as direct labor hours or machine hours, activity-based costing focuses on the activities that cause the consumption of overhead resources. So what we have here in this slide is a summary of the steps to compute using activity-based costing. So phase 1 is you assign indirect cost to activities. So what you need to do first is you have to identify what are the activities and what are the related costs for the activities. Next is you identify and estimate the cost drivers related to the activities. And then you can calculate the activity rate. For your cost, don't worry so much because normally it will be given straight away. And what you need to do is just match and calculate the activity rate. So in the second phase, once you know the rate, you should also identify the usage of the resources pertaining to the activities. And then you just multiply the rate with the activities to get the cost amount for each activities related to the product. And lastly, you total up the manufacturing overhead cost for the product. Okay, that's all for this video. I'll see you in video 2. Bye.